Hello and welcome to the trade setup. In this video we are looking at silver, and of course we will also be taking a look at gold as always, and both of these commodities actually seem to have delivered my preferred outcome. So if you remember, in the previous video we had the structure strongly suggest that room for lower prices was plentiful. There were several additional waves before we actually could even start to consider a clear bottom within an impulse in the internal structure, of course. So there was a high risk of extending even lower. Within both of them we did actually form one additional low, but today the levels of resistance considered for these possibilities have been broken. Today we actually have a very good chance of looking at a more substantial bottom to even be in place, especially in the case of silver. Now, before we get into all of those details, let me provide some context for you because it is quite important, and I do have a slight change to the structure that I am tracking, because on the larger time frame, I am looking for silver to potentially deliver an impulse where the wave 5 of this internal wave tree would have been the strongest wave. This is actually even common within commodities. So I would currently be expecting to build an internal wave 4 and a wave 5 to head to even higher prices. Well, if we already have a bottom within a wave 4 in this structure, I'm afraid it's not an appropriate match for what I would have within this as a wave 2. It is actually too short. The wave 4 matching this as a wave 2 would have actually had to be longer. Now, in all truth, it is possible that the wave 1 would have topped here instead, in which case the wave 4 might actually seem a bit extended. But what I'm actually even preferring at this point, especially if there is a bottom in right now, is to consider that this wave 3 would actually still be able to extend, would be where this wave 3 would need one additional high before having a top in, because in the case of this structure I can quite easily interpret it as having something like a 1, 2, a wave 3 up, a wave 4 down, and then this would build the wave 5, completing the larger degree structure. In such a scenario, I would need a slight adjustment to the levels of support because the wave 2 would have bottomed significantly higher, and in this scenario, we also notice that we would have just touched the last level of support, the 50% retracement, which now sits at $62.27 for the second time. In truth, I'm not too attached to any one of these interpretations. Frankly, I do not care if this is an extension of the larger wave 3, or if the larger wave 3 itself had already topped here and we're looking for the larger wave 4 correction. I do believe we still have plenty of room in terms of support we could track for silver, so I don't expect a catastrophic failure if we cannot hold here the current lows. But this actually allows me to look for an interesting extension for silver. So we continue with this scenario where within this wave 4, I actually have to account for a different pattern that would have been in place, as within this structure, I do not have even much resistance to look for continuation to lower prices. This move down actually seems quite complete, and the interpretation I would probably prefer in the case of silver right now would probably imply a triangle within the wave B of the wave 4. So I would consider something like a wave A down, and within a wave B, I would have something like an A, B, C, D, E structure, where the wave C, the last leg down, the larger A, B, C pattern, would have just formed a more substantial bottom. It's probably not an ideal pattern, to be honest. I do not really like that within the wave C we didn't actually form a lower low. I would have actually liked for it to push below $61, and there frankly are other interpretations that could account for the current structure. It is also possible that we are building a massive triangle where I would only have the wave A down complete, I would be looking to build a wave B, and then so on. It would expect a C, D, E before having a complete correction within this as a wave 4. So there is no scarcity of possible patterns to consider in the case of this chart, and what I would rather focus is instead the levels of resistance. I would be looking for a potential bottom certainly, as the levels of resistance have actually been broken. So in the smaller time frame, let's say I want to look for what path would still be able to lead to even lower prices. First one that comes to mind would imply that this could be building a 5-wave move down, yeah? In this scenario, I would have to consider the wave 1 would have actually bottomed here, this would have been my wave 2 top, and the wave 3 would have just formed a more substantial bottom. Well, all is good, except that the levels of resistance for such an interpretation, for such a wave 4, would have been far exceeded. We cannot really expect this structure to be pushing to even lower prices. Well, next one I could track would imply that this could work out as an ABC structure, in which case the wave 4 could actually allow a higher level of resistance up to the 61.8% retracement instead. Well, would you look at that, we are just testing the resistance level from above. So this might actually still turn around, it might actually still deliver that one additional low in the case of this structure, and don't get me wrong, there are other interpretations that could lead to lower prices, especially as on the gold chart, it's not very indicative of a more substantial bottom as we have here on the silver chart. On the gold chart, there are actually a few patterns that could even strongly suggest continuation to lower prices. But not here. Silver actually has a very good chance of having a bottom already in, because I do not see any pattern that is highly likely of continuing the downtrend that this move down is currently within. There always are options, but none of them are particularly likely. So before we head onto the gold chart, we go into the smaller time frame, and within this structure, I can already start looking for a pretty decent move up actually, because I can track this to be a series of 1-2 setups where I could be looking for an impulse even to be currently in formation. And in the case of this interpretation, I would have still another 1-2 setup here, another wave 1 up here, a wave 2 down here, and this would work out as my wave 3, my wave 4, and the wave 5. So the main structure I would focus on, the main levels of support I would focus on at the moment would imply that we would be looking for an internal wave 4 area of support. We would expect a wave 4 correction to certainly happen at this point, even though it's not as necessary as it may appear. It could certainly extend directly higher, but I would primarily be looking for a retracement into the region between $70 and let's say 15 cents down to about $68.80. And I do want it to be clear that other interpretations are certainly possible. We aren't owed to actually build an impulse in the case of this structure, but these are the primary levels of support I would be tracking at the moment. I would be looking actually for a potentially quite bullish structure to be emerging as long as we hold the levels of support for such an interpretation. And as we build this wave 4 and the wave 5, we would complete a large degree wave 3. We would be able to look for the next degree of a 1, 2, 3, and a wave 4 and a wave 5. And so on until we complete the entire structure, the pattern extends even more strongly, or the pattern fails. But for now, these are the levels for silver. So moving on to the gold chart, we are actually in for a treat here. The resistance levels have once again been broken. There is no denying about that. It's holding up quite nicely even. But I do see that within this structure, we have just pushed into structural resistance. We did actually form a quite substantial top here. So at least an internal correction I do have to prefer. Now, the problem in the case of gold is that within this move down, I actually have levels of resistance that are quite compelling, that do carry some weight. We have a structure here that does actually have some room for even higher prices within a correction. What I would primarily be watching out for is the possibility of this building something like an ABC pattern where the wave C would be missing at least a larger wave 5. Now, before we actually head into showcasing this interpretation, I do want to highlight that it is still possible, actually, in the case of gold, that this move down would have actually never been complete, that the structure, the initial wave C we have been tracking, would actually still be in play, and we would have a 1, 2, 3, 4, and a 5. I am fully aware that the levels of resistance for such a scenario have been broken, but actually not that significantly, not enough anyway, for me to fully disconsider this possibility. So with them actually being broken sustainably enough, we did have to favor a more substantial bottom to be in. It doesn't need to be the case that this is the scenario that is playing out, that we have been extending right now within this wave 5 instead. But to be honest, it doesn't actually matter, and if this has been indeed the wave 5 of this as a larger wave C, I would be able to identify a bottom as already in, because I would be able to look at this structure as an A, B, C pattern to be complete. So this is actually more to understand where I fit the possibility of a bottom in the case of gold. Now, with that said, we go into the smaller time frame. We do not really need to care too much about which count has led to these prices. We only really need to care about the current levels of resistance to watch out for, and since I do not really have any resistance levels to consider that would imply direct continuation to lower prices within this move down, I am looking for a potential ending diagonal to still be in play, to still be a possibility. And in this scenario, I would be watching out for the 61.8% retracement. So far, we haven't even actually gotten beyond the 50% retracement, so I would actually need to see a sustained break above $4,500. So in the case of this structure, I do not feel too bad about it, because I can also be looking for a potential impulse to be in place here as well. I could be tracking a similar pattern with what we have on the silver chart. So primarily in the smaller time frame, I would have to look for something like a 1, 2, 3, 4, and a 5, where the levels of resistance that I really do not want to see broken to still be able to trust this uptrend as a reliable pattern would extend down to the 50% retracement, $4,300. And of course, even here, it is possible for the wave 3 to extend directly higher in case it fails to reach the levels of support, but I do notice that we have a bit of structural support where the previous lows that have formed here are actually in line with the Fibonacci retracement levels. And really, there isn't much else to add beyond this. I would still prefer for both silver and gold to be trending higher. In the case of gold, I would like to see the levels of resistance broken. In the case of silver, it has already achieved that, with the only thing left to prove is to sustain the break above the levels of resistance. So for now, we will stop here. These are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoyed the content and want to support it directly, check out the channel membership, and I'll see you in the next one. Bye bye.